I find on-chain charts quite interesting. Let's look at the Bitcoin wallet sizes, at the number of wallets with certain balances of Bitcoin and how they developed over time. When we look at the very large wallets, so more than 100 Bitcoin, so that's currently 2 million US, right? We can see that that number of wallets did not go up with the recent rally, right? This is a very long-term chart starting in 2010, and we've got our 2017 rally, the 2018 crypto winter, where we went down by 80% in Bitcoin, and then the recovery, also over here, the Corona crash. And the number of those very large wallets of a bit over 1 million or so, it was pretty much flat. When we look at smaller wallets, so 10 Bitcoin, that's currently 200K, that chart looks a bit more positive, right? So let's toggle between the two. When we look at 100 Bitcoin, this pretty much went down in number of addresses. Here on the left, we've got the actual number on a linear scale. Note the price is on a logarithmic scale. The number of addresses is on a linear scale. We can see for the 100 Bitcoin addresses, this went down. For the 10 Bitcoin addresses, we don't see that much of a down movement. But also, since 2017, not a lot of growth here. Now, there's two ways to explain this, right? One explanation is that simply the large money isn't that interested in Bitcoin anymore. Another explanation is simply because Bitcoin's price went up that much, that now with this elevated price, people don't want to have that much capital on a single wallet. They might diversify, maybe across different centralized services, maybe across different hardware wallets, so that when there's one single failure, right, you lose your private keys on a wallet, that you don't lose all of that money, which might be pretty significant when it's 10 Bitcoin rather than a smaller amount. Now, this is where the 1 Bitcoin number of addresses comes in. This chart looks much more positive, right? This is increasing over time. We are currently at 884,000 wallets. And what I find interesting here is when we zoom in, when we have here the 2018 crash and we look at the final capitulation where Bitcoin went from 6.5K to 3.5K, we see that the number of wallets here with 1 Bitcoin actually went down. So if you're seeing this simply as the retail wallets, people were front running this crash. And then once the crash happened, they started to DCA in again. More and more wallets with 1 Bitcoin sprung up. And then there was selling activity happening during the bull run, right? There's not so much increase of that number of Bitcoin wallets during the later part of the rally. Now, what I find fascinating here is how quickly the number of wallets increased with this recent 70% crash, right? A lot of retail seems to be buying this dip now. We had less steep of an increase during the Corona crash, and Bitcoin was way cheaper at the time. You could buy Bitcoin for 5,000. Now you have to pay 4 times the amount, but still the rate at which the Bitcoin wallet number is increasing is faster now. So it looks like people that are currently buying, retail that's currently buying, is having quite a strong conviction. The idea is that Bitcoin isn't going to go anywhere, that it will stick around, and that you have to buy the dip in order to sell high. And when we come down from the top by 70%, it's probably perceived as an opportunity, despite all the macro uncertainty, right? Despite the monetary tightening, despite the tech stocks coming down because of that, and the high correlation of tech stocks to crypto. Even though we see all of this, retail seems to be buying aggressively. The number of wallets that hold at least 1 Bitcoin is rising sharply. And I think that makes sense, right? We've got a lot of indicators that point towards a bottom. We've got the 200-week moving average, right, where we rarely have been below that moving average, right? 1 week over here during the Corona crash, then a few weeks here after the Mt. Gox crash. Now we are again below that moving average, so this could be a potential bottom indicator. Then we've got the logarithmic regression, so a Bitcoin rainbow price chart, which also encompasses the bottoms quite nicely historically. We are not yet at the absolute bottom, that's here at 15.5K, but still it shows we are relatively cheap. So another reason to dollar cost average in. And then what probably a lot of people have already seen is the realized price, or basically at what kind of price did Bitcoin move the last time? It's more or less an indicator of Bitcoin holders in aggregate being currently in profit or in losses. If the current price is below the realized price, then most people, or at least in aggregate, in terms of capital, Bitcoin investors are at a loss, which then tended to be pretty good buying opportunities, right? If we currently look at this, again, we are slightly below. So another indicator that this is the time to buy. It is obviously not very fancy to buy right now. There's very little attention on crypto. Very few people actually execute on this, but that's exactly what you should do, right? If you want to outperform, you have to be against the masses. Outperformance, per definition, can only happen for a subset of investors. The majority cannot outperform. So if you want to outperform, you have to do something that most people don't do. And most people are currently not buying. Or at least most of capital is not buying. Retail is buying, as we have said, but the large institutions, the large capital isn't buying, and it is depressing the price simply to get risk off, simply to hedge against the current macro environment. But if you've got long enough of a time horizon, and I think that's simply just 2, 3, 4 years, it's probably not even that long, then I think it's not a bad idea to buy at these current prices and potentially buy even further, right? In case we do hit 15K or so, very much possible, simply just continue buying. And then once you've got enough risk allocation, then don't look at crypto anymore. Simply put that ledger aside, let it wait for a while, and come back again once everybody talks about crypto again. Crypto won't go away, it just goes in waves. And in order to ride the waves, you have to do the opposite of what everybody else is currently doing. So you have to sell when everybody screams Bitcoin is going to 100K and there's maximum hype when Dogecoin is pumping. You have to buy when nobody is looking, when videos like this get comparatively little views. There's another video where I discussed the current macro environment, a bit of a different format, something like a fireside chat. Hope to see you in that video, and thanks for watching this one. Bye bye.